Hey traders, this is Blake Morrow with Trader Summit, and I'm so pleased to have Michele Schneider. She is the chief strategist over at MarketGauge. And Michele, let's bring you on. It's been so long since we've spoken. Great to see you.
Has it really been like since pre-COVID that we talked?
No, I don't think it's been that long, but boy, it's been at
Okay.
least a year and a half since we've talked. And I noticed you're wearing your bullish green jacket.
Yes, it depends on what bull we're talking about right now, but yeah.
Well, that's good that you bring that up. It's interesting that we're seeing just the markets move. We're at all-time highs in the S&P. I know you have a trade idea that you're going to talk about here in a moment, but before we get into that, let me just ask you really quick, how do you feel about this move that we're seeing in equities, and does it still have some legs?
Well, that is really a great question. And I don't think anybody would have guessed that we would have been at this point at the beginning of March. It's been spectacular. And certainly for people who just follow price, it's been a very highly profitable. It's not surprising with tech, particularly if you're looking at the giant NVIDIA, because there's nothing to compete with NVIDIA right now. And chip technology, and they're obviously in the design, is the future, with especially AI explosion. Of course, the question is it a bubble or what have you. I think basically at some point we may see some shakeout of some of the names just because they can't keep up or interest rates go crazy or what have you. But overall, no one's going to deny that AI is it. And so the comparisons to the dot-com bubble, and I don't think are real comparisons. But what is interesting is that coming into this year, we thought that the S&P would be range bound, and it's obviously surpassed where we thought it could go to the upside. But we also thought that at some point commodities would make a comeback, as inflation would make a comeback somewhere between March and June. And so it's possible that we're starting to sniff that out a little bit. And then the question is going to be, what does that do to the overall market going forward? Number one. And number two is, tech could continue to move higher, obviously, unless we start to see a very aggressive Fed. But some of the other areas of the market that are finally starting to broaden out, if you look at RSP, for example, may wind up having issues. But right now, everybody's happy, so that's a good thing.
Yeah, and I was going to say, you thought that the markets would be range bound, and me personally, I'm surprised as a lot of people to see the S&P where it's at, but I think it's really surprised a lot of the market that thought we'd already be in a recession and stocks would be so much lower, and that's really, I think, surprised everybody. So, being breaking out of a range, yeah, it's like, okay, we're at the top of the range. Oh, we broke out. Now it's bullish. You follow price action. That's what you guys do at MarketGauge, which is obviously it helps when you are a price action person in this tape, I would say. So let me ask you this. You said just moments ago, you're sniffing out some commodities. I'm going to tie it into what you think is going to be a great trade going into this year and maybe more near term. And without stealing any of your thunder, what is top of mind when you're talking about what you're thinking about trading right now or what you're already trading?
Well, it's funny because on Valentine's Day, I was on Bloomberg, and they asked me, what stock would you marry? What stock would you date? And which is the one that got away? And so the date stock was Coinbase, and clearly that's been a very, very fun date and continues to be a fun date. The one that got away was Microsoft, because I was looking at Microsoft a couple $100 cheaper, and Microsoft actually still has a lot of potential to the upside. It just hasn't kept up with what Amazon is doing, or what with and obviously NVIDIA is doing, or AMD, or even SCMI. But the one that I said I would marry is silver. So I have been feeling this way for a while, and there's a couple of reasons. One is that just in life in general, considering the cost of living, inflation where it's at, even if there have been pockets that have come down, if you look at a silver chart compared to, let's say, the Dow close to 40,000, you have to say at the point when I mentioned that I was really into silver and I already long silver, it was trading at like $22.50 an ounce. And that's cheap. Cheap relative to gold, cheap relative to the Dow, just cheap, cheap, cheap. So I had to figure out why. And the only thing that I could think of was that there was so much money flooding into tech, obviously, and that was a part of it. Gold really was sitting between 2,000 and 2,100 because that's where the fear mongers are going potentially. But silver represents two things: industrial growth and also inflation. So I felt like one of those two things would have to kick in. You can't have a growing economy without seeing higher silver prices, and you can't have a reoccurrence of inflation without seeing silver prices. So lo and behold, last week, my marriage, if you will, to silver started paying off. I'm like, okay, it seemed like a deadbeat guy, but now starting to do better. And it's at $24. So, that's $1.50, considering how it's done nothing in just a couple of days. So that gets me kind of interested in riding this trend out. It has some resistance along the way. Obviously, it has to get through 25. But I think like gold getting through 2,100, silver is here. And we know that silver not only can be explosive to the upside, as we saw in the 70s, but also in 2021, it was a meme stock, or was that 2022? I forget which one.
Right. Post-COVID lockdowns. I mean,
Exactly. And all of a sudden it flew to $27 an ounce. So I think, anywhere between 24 and 27 is where we're going now. We get over 27, we could see 40.
Well, I'll tell you, there's a lot of people that love silver just because it is. I guess we could say it's like it's poor person's gold, right? And but it has held up really well. And now that you got this massive breakout in gold, you're thinking that silver is going to play a little bit of catch up, right?
Well, back in the day, and don't forget, this is where my life began in the investment world, was in New York on the Commodities Exchange. And I was lucky and old enough to be there just when everything was exploding, as we got into 1979, 1980. And silver will outperform gold in an inflationary environment. And it's been so grossly underperforming, not like I mentioned before, the Dow, but also gold. So yeah, I mean, there's a couple of things to look at. Is if we're going to get into any real growth in the economy, when I say real growth, I'm talking outside of tech growth. I'm talking about small caps, which now we're seeing money rotate into, the consumer market, which we're seeing money go into, some of the stocks that are in the XRT basket, which I like because it's staples and discretionary. Transportation, which is near all-time highs. If we're going to really start to see growth there, and I think that could happen in 2025, 2026, silver would benefit from that and would be cheap. But if we're going to see an inflationary period, which is also really very possible, then silver would also inflate because gold would just get too expensive and silver would have to catch up. And that's really kind of what the possibility is right now.
Got it. Well, I was going to say, with in regards to silver, it looks like it really wants to take off. And given the fact that it just broke, and I'm going to go back to the charts really quick, just so everybody can see them. Silver just broke the 200 DMA today, and we finally closed. Well, it looks like we're going to close well above it, and I don't think I'd be fading that as of today. So it looks pretty bullish, and it looks like near term this could be a real big winner for you.
Well, yeah, I mean, besides the obvious money, and we have our clients in it and our investment fund, but even more than that, it's really the implication. And I always like to talk about picks. And obviously, I'm very proud when we make a lot of money, like with Coinbase. I was talking about it at $80 and it's at 225. And of course, Bitcoin's a whole other animal. But I really think it's important for people to understand why things move. And that goes back to, the narrative that you were saying in the beginning, where so many people got it wrong. And people have just felt that inflation was never coming back, and we may not get to 2%, but hey, 3% will take it. This really could totally upset the apple cart, because the Fed, and this is why I love to watch the silver market and sugar, which has not done very much, but the silver market, in particular, because it will force the Fed to make some kind of decision. And even though the Fed has paused at these rates, and obviously the market has gotten used to them, and it's a good thing, would they be so keen on raising rates if we start to see oil, which right now is kind of hovering around this $80, but that could be a major breakout. Silver, if it can get through, hold 24, get through 25. Gold now over 2,100. What's the Fed going to do? And I think that's why you have to watch silver, because it will tell you that the Fed probably won't do anything unless silver really starts to creep back up over 27. And then, of course, can they stop the train? Because again, they'll be behind the 8 ball. And B, will they do that to the erring of basically killing the economic recovery that we've had that most people didn't expect and put us back into some kind of a stagflation or recession? And that's why you've got to watch silver. So it's fun to make money on it, but it has a lot, it just says a lot.
Yeah, well, I think it's a great idea. And I want to say I appreciate you bringing it to the Trader Summit. And for those of you that like what Mish is doing and what she does, you need to understand what she does over at MarketGauge. Mish, what do you guys do over there at the team at MarketGauge?
Well, it's interesting because I personally have changed a lot through the years in MarketGauge. I ran a trading service, a discretionary trading service for 14 years. And Blake, I gave it up in, actually, I love Valentine's Day because I gave it up in Valentine's Day 2023. And the reason is that it was an extremely active service. And after 14 years, I realized that I was struggling to keep up with our quant models, which Keith and Jeff Bish and James Kimball here have been creating for the last 10 years. So essentially what MarketGauge's focus has shifted on now is quant models that really go across all asset classes on the understanding that you're going to catch what's moving based on trend strength indicators, which is our own proprietary software. And that if you do a blend, not obviously all asset classes are going to move at the same time, but with risk parameters, maybe that asset class that you're in, you might lose a little money on, but you're not going to get killed because we have these strong risk parameters in it, but you're going to catch the things that are really moving. And once I saw how great that was, as a discretionary trader, I could step back and think about, well, what am I foreseeing? And, inflation, metals, some of these vanity trades I've called have been really where I've been focused on, and vanity trades being on the basis of the diet drugs, which I think hasn't even really started to trickle into the overall economy in terms of obesity really maybe being solved. I mean, that's incredible thought, but it's possible. So anyway, getting back, I know I'm all over the place. Getting back to MarketGauge. So what we've done is we kept the quant models for people to buy subscriptions to do themselves. They can buy a series of them. They can buy, obviously, we still have tools, momentum tools, and we have, phased indicators in our ETF monitor. But we also have an asset management company. So a lot of what MarketGauge is doing now is we've shifted to, we can train you and you can follow what we do, or we can do it for you. And that's kind of where my discretionary trading is going now, is more in the asset management company. So, I've been long silver for a while, been long gold forever, long some, other things that are finally starting to move higher. And that's been fun. That's been fun because I don't have the same pressure as I did running a service.
Well, Mish, it's really nice to have you here, and I look forward to having more conversations with you, especially throughout this year. It's going to be an exciting year. Let's face it. We're at all-time highs right now. There's a lot of forces pulling the markets higher. There's a lot of people trying to push back against it, which means there's only going to be more volatility, and that's what we as traders love. So if you guys and gals like what Mish has brought here today, make sure you give her a thumbs up, subscribe to the channel. It is free to do that, and jump down in the comments below if you also agree that silver is a good long right now, like Mish. So Michele, great to see you, and I look forward to having you here again soon.
Thank you so much, Blake. It's been such a pleasure to talk to you.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.